Welcome to Bar Chart's series of educational webinars designed to enlighten you on a variety of trading ideas and concepts, to inform you of the features and tools Bar Chart provides related to these concepts, and offer you some traders' insight to help you make a more informed trading decision. Today's subject, trading volume, the most powerful technical indicator in the world, or at least in my humble opinion. Now, it's been many moons since I worked on the trading floors of the NYMEX. However, during my time there, one became dialed in on certain sensory inputs. And one of them was the noise level that was coming from the pits. Now, to a first time visitor, the noise can be surprising. But to a seasoned trader, you can distinguish between active days and, as the saying goes, quiet days by the level of the noise of the volume. The louder it got, from traders who were competing for bids and offers, the more active trading became, and increasing the significance of price movements. The more price movement trended, the greater the volume of contracts or shares traded hands. Now, today's modern trader doesn't have the benefit of hearing the noise coming from former uh, pits, but they do have volume, the record of transaction between buyers and sellers. And this silent indicator can be deafening as the days in the pits. And when it comes to the awareness of price action and its movements. Hello, everyone. My name is John Rowland, Bar Chart's Senior Market Strategist. And, as I migrated from the pits to the screens, I had to discover a new skill set. And one of those skill sets was learning how to read the importance of trading volume. Now, my goal today is to demonstrate how volume validates price, the four phases of price volume relationships, and the significance of peak and low volumes. And finally, we're going to look at volume-based technical indicators that can complement and also give us conditional determinants to trend and price analysis. But before we turn up the volume on market analysis, please welcome our moderator and Bar Charts Project Director, Gene Baker. Hello, Gene.
Hi, John. Hello from frigid, frosty Chicago. Oh boy,
The
is it cold
frozen
here.
tundra.
Oh my God, it's cold, really cold.
Yeah.
Not stepping foot outside today, that's for sure.
I don't want to give you bad news, Gene, but I saw the 15-day forecast, and I think you're in for another polar vortex towards
I
the end of
know,
next week.
I know, I know, I know, I know. Thinking warm, sunny thoughts, that's all I can say.
Well, I think there's only 100 days to the first day of spring, so there you go.
Yeah, that's right.
All right, Gene, you ready to jump into it?
I am. Let's go.
All right, just a reminder today that is for educational purposes, and decisions to buy, sell, or hold or trade securities, commodities, or other investments involve risk and best made on the advice of a qualified financial professional. And under no circumstances shall we be liable for any loss or damages you or anyone incurs as a result of any trading or investment activity that you or anyone else engages in, based on any information or material you receive through barchart.com and our services. Okay, so let's start with some just basic tenets to how volume relates to price and price action. So high volume confirms trend. And an awareness or strength of a trend can be confirmed by rising volume. Low volume contradicts trends, and lack of volume tells us there isn't much excitement about a price, or price has found an equilibrium. Now, volume declines in consolidation patterns. As price trends sideways, volume declines, and a lack of conviction from buyers or sellers. Now, the market is waiting for the fuel to push it through a level of support or resistance. That fuel is volume, and volume increases with the beginning of a new price trend. So there's this cycle or this synergy relationship between volume and price. Price moves because of volume, and price movement attracts volume. So there are four phases of volume, price volume. And when doing chart or price analysis, these four phases, I'd like you to focus on, but more importantly, understand what are the results and the probabilities of these phases. Now, the first phase is strong demand. Price trends up, volume is rising, and the uptrend is confirmed. So here we have crude oil, and I just kind of want to show you this. There you go. You see rising volume that is confirming an uptrend. Now, I want to stop here for a moment and talk about volume in our charts and how you can add it to your chart. So anytime you want to add an indicator, you can come up here where it says indicators and click on that, and you can either scroll down or just type in the word volume. And this is going to show you a lot of the different volume type indicators that we have. Not all of them have volume in them. We'll look at a couple other ones before the end of the day. But I could just add volume to my chart, but that would be just, there would be no reference to me. So I think it's important for us, if we're going to add volume to our chart, that we need some kind of a reference. And so that reference would be a volume chart or pane that has a moving average. And this moving average is going to be a benchmark for us, or let's say a baseline for us to do our analysis. Now, in the case here of crude oil, you can kind of see this, right? So we have these volume bars, green and red volume bars, and this black line is a smoothing out of the volume data over a certain period. Now I have mine set for a standard 20 period. Now, 20 periods, if you think about it on a daily chart, is 20 trade days a month. So what I'm really looking at is the monthly average. But there might be times where I might need to look at volume over a shorter period of time if I'm swing trading or maybe if I'm day trading. So, I might change that period time frame. Here I've changed it to 9, which kind of reflects maybe a 2-week period. Notice how my moving average line has changed, and you can really see it here that in the last 2 weeks in crude oil, you can see the rise in volume that is confirming this uptrend. The other point that I want to point out here is that I've changed this now to an equity chart. Excuse me. Get a little frog today, folks, so just bear with me. Is the color of the volume bars. So a green bar represents a day where what we call up volume. In other words, the closing price for that day is higher than the previous day. And a red bar represents a down volume day, where the closing price for that day or that period is below the previous period's close. Now, if you see a blue bar, well, that just tells you that on that particular period or day, in this case, that the market was unchanged from the previous close. But again, for me, it's not really about the moving average if it's rising or falling. To me, it's about the number of bars that are above or below that average. In other words, the baseline for me. So if I can see, for instance, in this trend, there's more days that are at or above the average volume than there are that are below. So then we have the next phase, which is weak demand, and price trends up, but volume is falling. This is an uptrend that is weakening. And I kind of call this a trend in question, or a trend that when tested will fail. Now, in other words, if price retraces or draws back to, let's say, a trend line of support, then these weak types of trends will typically fail. Or a rising trend that has no volume behind it is a weakening trend. Now, I want to talk about another nuance when we talk about volume in our charts, is that in the equities markets, we get our price information from the CBOE BATS. Now, the BATS is going to give us the live or real-time volume, but I want you to watch this volume bar here. If I am looking at a real-time chart and I'm getting the BATS information, well, the BATS only represents about 1/10 of the volume of all the different exchanges. And so notice here that, we only see a very small amount of volume in our volume bar on a real-time chart. So if I'm going to do volume analysis on a day basis or intraday basis, I want to make sure that I'm not in real time so that I can see that accumulation of data through multiple exchanges. Now it's a little bit delayed, but notice that even though I'm not in real time in my price chart, up here, I still get real-time information from the CBOE. So just keep that in mind. It's really more important when you're doing intraday analysis, and that if at the end of the day, your real-time data chart will show the accumulation of volume over the different exchanges. Okay. So weak trend, right? A rising weak trend. So let's go to Microsoft. And here's a great example of that. Here's a rising trend. And we can see that there's not a lot of volume above the average. So this is kind of a weak trend. In other words, that when price comes to levels of support or retests our trend line, that there's a higher probability that our trend is going to fail. Okay, strong supply or price trend is trending down and rising volume downtrend is confirmed. Again, let's go back to Microsoft here. And here we can see, right, a price trend and rising volume. So this rising volume is confirming our price trend. But notice that not only is it validating the trend price action, that we're also seeing the increase in volume as we see more price movement. In other words, it is attracting volume sellers. The other thing I want to kind of notice here is as we go to the next phase is notice that prior to the sell-off right here, prior to the sell-off, we had weak volume, of the previous uptrend. And then we have what was called the fourth phase, or the weak supply. Prices trending down and falling volume. And this is a downtrend that is weakening. Now, there's a couple here. Here's a down trending price action. And again, you can see that there's below average volume, so it's not really confirming this price action. But let's go back to crude oil. And, let me look at this from a little bit bigger perspective here. You can see that crude oil for the most part, let me change this chart though. I want to go to a daily nearby, but it'll still be this basically the same thing. Is that you can see that crude oil has been was kind of in this downtrend, right? And lower highs and lower lows. Now, yes, it had found a level of support, but it was still trending lower highs. And then also we get this dramatic drop in volume right here. And this was a kind of a sign to us that this selling pressure that had been building up for a long period of time was over. Notice how that the red bars, or the selling pressure, is waning from here. We're seeing a lot more red bars to more advancing green bars, or a potential change in trend. So let's talk about the significance of peak volume. So peak volume is the market's way of telling us that a price movement is about to happen, and often high volume signals a reversal from the current trend, or it could be the fuel that sparks a movement of an existing trend or the beginning of a new trend. And these extreme volume events announce a battle of great conviction between buyers and sellers. So there's two types of events we can look for. We can look for a single bar, volume bar, and this means that price has reached an extreme and that there has been a price shock, so to speak, and that is most likely going to be short-lived, and that price is going to reverse quickly. The second event is more important to us in our trend analysis, and we want to look for a cluster of peak volume. In other words, multiple periods. Now, this is a clear sign that price action control is being wrestled away from either buyers or sellers, and that a coming price movement or trend reversal is on the way. Now, I know there's going to be a question. It's like, well, what is peak volume? So again, that's why we need that baseline. I think if you're going to look at a judgment based on peak volume, it's got to be at least 2 times your average or greater, 2 or 3 times. That's really what I would say, but you will be able to recognize it on your chart. So again, let's go back to Microsoft. And you notice here, you can see there's multiple single bar peak volumes. Again, let's think about this in terms of what they're telling us. So first of all, here's a green one, right? Right. So peak volumes usually are signals of tops and bottoms. And you can see the market had been shooting lower, but we had an up volume day after this price shock to the downside and a quick reversal of trend. Again, here we see a a peak volume as we reach an extreme price, a level that was kind of in this range of price that we had been stuck in. And again, down, here's a price shock, right? A gap lower on a peak volume. Again, probably a very short-lived event. And then here we see a peak volume, which comes after price has started to fall. And this is where we get into the theory, the Dow theory of Charles Dow, that believes a substantial increase in volume often precedes a significant price movement. And again, let me read that again, that an increase in volume often precedes a significant price movement. So again, here we see a volume price increase that preceded a new down trend. Okay. The caveats of low volume. So even though price can trend in a low volume environment, low volume is a true lack sign of conviction of our market participants. And in weak demand, it indicates that buying enthusiasm is waning and uh, reveals fewer new participants. This is a signal of a weakening trend. And in weak supply is a strong indication that price action is bottoming, which hints of a potential bullish result. Some of you may have heard the expression, never sell a dull market. So where does this put us, and what does this mean to us as we apply it to our pricing trend analysis? So low volume implies weak or a weakening trend. Now, in a strong trend where there is the presence of high volume, or so I better yet say a wording like above average volume, classical levels of support and resistance will reinforce or re-engage the trend. Weak volume trends upon being put to the test will fail. And price at that point will seek out levels of higher price conviction. In other words, high volume. Again, I'm back in Microsoft here, and I'm going to go down here. I'm at 3 month. And remember, here is our week uptrend that was not confirmed by volume. So, in classical terms here, we have this kind of this uptrend, and here we have this nice green candle. And if I count back, let's say 4 or 5 days, 1, 2, 3, 4, here's 5 days, right? Think about this. If price got below here, this would be a new weekly low or a new low over the last 5 period. And that is classically a level where if you have a strong trend, that you're going to find support. And you can see that our red candle just blew right through. It did not find support in this weak trend, but it did fall, and it fell to about here. Again, if I go to the left, and I have this candle right here, notice that this candle, the top of this candle, is one of the only days in this uptrend that had volume. And then price falls again, and again, we can see that here we can see where price paused or stopped falling. And again, notice it happened on one of the only candles in this uptrend that had above normal volume. Now, let me just give you a little trader's insight here. I love these kinds of candles, these doji candles, where you have a small range of price and you have a large amount of volume. To me, these are very significant, especially if I can find them near a level of where we're breaking out of the consolidation level and a breakout to the upside or a breakdown to the downside. These zones or these levels tend to be great entries when the market retests them, when the price comes back to them. And you can kind of see it here on this day, but I really like it after the first retest. So it did come back here and touch it the second time. But I do like that first retest on one of these large volume dojis that I can find around areas where a trend is starting to begin. So keep that in mind. Look for those in your personal trading. Okay. So those are kind of the basic rules or how we can look at raw data on daily volume. Now, the same principles can be applied to intraday and weekly timeframes. And just remember that intraday might be influenced by higher time frame trends, and weeklies, it might take a longer period of time for the results or probabilities to take effect. But there are moments when volume is obtruse, and right, we really don't have high volume or rising volume, or we don't have low volume or falling volume, and volume is not always consistent. But we do have technical analysis tools that help us to attempt to quantify the price volume relationship. And their benefits can be arranged from, they're useful as a warning of trend change, or they can be complementary to trend analysis. So in other words, volume tendencies, which we just went over, and indicator signals are not always reliable enough to design an actionable rule, but can enhance a cluster of evidence among multiple technical analysis tools. So again, if I'm going to look at different types of volume indicators, I can just come in here and type again the word volume. And here you can see many of the different volume indicators. Now, I know we got a request about the VWAP. We have a webinars that is just on the VWAP. So I would recommend that you watch it. We're going to look at 6 other ones today. Another source of information in terms of technical analysis, if you go under the Learn section here, we have a technical indicator libraries, and you can find all the technical tools that we have And the ones that I'm going to mention today will be found in. And inside of here, you're going to find the basic rules, the math, the interpretation, and probably even a descriptive chart example. Okay. Now, one of the benefits of being uh, a member of bar chart is that you can create templates based on different technical indicators. And I showed you kind of that volume template. So here are my templates. And again, this would be that volume template that I use. But we're going to look at OBV, unbalanced volumes, and this first one, price volume trend. Okay, so all these definitions we're going to go over of all these different volume technical indicators are just kind of, I'm paraphrasing or rewording um, from definitions that come out of the Kirkpatrick and Dahlquist technical analysis book. I would suggest that you would read that if you're really into that kind of thing. But again, it's more of a paraphrasing. So on balance volume, which is this down here, is really your old school, and it's a simple concept. What we do is we're going to take the total daily volume and is added to a cumulative index. Now, if price closes higher, it is added to it. If price closes lower, it's subtracted from the index. And that the high volume in one direction or low volume in the opposite confirms our trend. And if high volume is not confirming trend, then light volume in price, trend, direction, or heavy volume in the opposite can suggest the potential impending reversal. Now, I'm going to make it more simple. In other words, we're going to compare the price trend and the trend of the OBV. For instance, if OBV doesn't make a new high as price does, then this would be a signal of what we call a negative divergence, and a pending reversal or new downtrend might be imminent. Now, again, let me kind of go to who are we at here? Let's go 1 year. And, you know, not maybe a great textbook example here, but we can kind of see that here we see this trend that was going up that is making a new high, but we can see that our OBV in a relative uh, aspect was not making a new high or was coming just very near a new high. So this would be what we call potential negative divergence. Or what we want to see is the trend of the OBV different from the trend of the price action. So you can see here, you know, they are both rising, but also the OBV starts to fall and is falling through our smooth averaged OBV. And this would be, again, another type of a divergence here. That might be an indication to us that we are starting to see the beginnings of a price reversal. So price volume trend, or PVT, takes the daily percentage change times the total volume. Again, this volume, if it's an up day, is added, or if it's a down day, it's subtracted to a cumulative index. Now, large percentages and heavy volume days magnify the impact on the index. But here we can see that, right? Here's that gapping down day, right? So a big volume day, remember that was a spike volume day, and also a big price movement, percentage movement. And so you can see that the PVT had a big impact. But what is happening here is the PVV is actually warning us of weakness, right? It's not confirming, again, if we look over here, it's not confirming this uptrend. It's still trending, right? It's still trending lower. Now, I know this is not very obvious, right? But what this is really telling us, the PVT is telling us that the market is actually, this whole market here is actually trending lower. And for purpose of trading, we should only be looking for selling opportunities or shorting opportunities. But really what the PVT is telling us here is that smart money is liquidating. All right, the next two I want to talk about are called money flows. And just like it sounds, there are measurements of money that flows in and out of a stock. Now, they are similar to an RSI, the money flow index. And it takes in consideration number of up days and down days. And what it does is it compares positive and negative money flow. And this one is really better to alert us of overbought and oversold conditions, not signals, conditions, very similar to like an RSI. So here you can see that example. When we get outside of your, let's say, your traditional 20-80 range, that would be an overbought condition, and that is a warning to us that there is could be a reversal in price. And you can see a 1, 2, 3 times, and 1, 2, 3 times we see a reversal in price. Again, if we were seeing a rising market, we would like to see in this scenario here, we really would like to see our money flow index rising above a previous high. So again, this one is really better for helping us identify these overbought and oversold conditions. But you can also use it like an RSI and the rules that are applicable to RSI. So one of the RSI's rules called the 50% rule or the 50 crossover rule, which basically says that when the RSI gets above the 50 line, that is signifying or identifying an uptrend. And you can see here 1, 2, 3 times where the money flow got above the 50 line, which is this middle line, and that would be a distinction of a potential uptrend. Other ones are called failure swings. And again, if you're interested in about the techniques of using RSI, I think we have a really great webinar that explains that. So check that one out as well. Now, the Chaikin money flow uses the Chaikin accumulation and disbursement line. We're gonna distribution line. We're gonna look at that next. But that line is created over a 21 period. And again, we're going to divide this by the sum of the total volume of the same period. So what we're going to look for is in cases where it rises above the zero line, here's the zero line here, that is an indication of an upward trend. And below the zero line, it's an indication of a downtrend. Now, the key here is about the duration um, above or below the zero line, not necessarily just a one-day event. And or if we see a directional symmetry with a prevailing trend. Now, like our example in our price volume trend example, we want to stay on the side of the oscillator. In other words, if we're above the zero line, then we want to look for buying on opportunities unless we can find a very discernible or directional trend. And then, what we're doing here is it becomes more of a confirmational tool and not a signaling generating tool. All right. So the next ones that I want to talk about are called accumulation and distribution indicators. And there's two of them. One is called the Chaikin and the other is the Williams. So let's look at the Williams first. Now, the Williams uses Wells Wilder's ideal of true range, which is a concept behind or the ideas that are behind defining true range. Again, we have a really great webinar. I think average true range is one of my favorite technical tools. I think I have several webinars on average true range. But again, what we're going to look at is accumulation days occur when the close is greater than the previous day's close, and the value that is going to be added to that cumulative index will be the current day's close difference from the true range low. And on distribution days, it's the closing price is below the previous day's close, then it's the difference between the close and the true range high. Now, each value is then multiplied by that daily volume, and then again added or subtracted from our cumulative index. Again, what this is trying to do here is trying to identify buying and selling pressure within one particular day. And that a series of days could give us a confirmation to a trend. So it's used similar to like a MACD, a moving average convergence and divergence. And what we want to look for is changes in momentum of our AD line. So we're going to look for things like divergences. We're going to look for breakouts from a particular chart pattern that could be confirming a price action. So here we are in Tesla. So let me show you that. Okay. So here we got Tesla is, right? We already kind of identified this, right? It's in this range. It's not really doing anything, right? It keeps bouncing back and forth, right? A level of consolidation. And except for two, spike events we looked at, light or below normal volume. But notice that if we look at the Williams 80 line, it's doing the same thing. It's kind of stuck in this range. So what we want to wait for is the same kind of chart pattern action on the AD line as we see in the chart. Here we see that the AD line breaks out of this range or this consolidation pattern, very similar to chart analysis. Again, that came here. This would be a confirmational tool for us that says, hey, this is the beginnings of accumulation. In other words, buying pressure, or the beginning of a new uptrend. Now think about MACDs, right? MACDs also shows us momentum, changes in momentum. So here's our smoothing average line, and here we can see, a peak, and then we fall below the moving average and then fail to get it back above it. This would be a sign or telling us of a change in momentum. And again, this could be a signal generating or enhancement to what we're seeing in the price action of this particular stock. Now, the chalk and accumulation distribution looks at the day's range in terms of the high, low, and close, and determines where the close is as it's positioned to the midpoint of the range. And again, if the close is above, that's an accumulation day. And if the close is below, a distribution day. And the theory behind both of these is that it's identifying that buying and selling pressure. So for example, of an uptrend, we should see more accumulation. In other words, we should see buyers pushing price higher at the end of the day. Now, which brings me to an interesting phenomenon, which is currently happening. And this is the SPY. Now, I apologize. I have a lot of stuff on my screen here, and I probably should have taken it off. But at this point, I'm just going to leave it up. So look at our Williams and our AD, our Chaikin AD lines, and we can see that the S&P here has kind of been in a sideways price action. But we can see since reaching the all-time highs, what is both of these AD lines telling us, right? They're both signaling to us selling pressure. In other words, professional traders or institutionals are probably liquidating at this point. And now it's not necessarily that we're in a downtrend, it's just kind of warning us that there's a change afoot. Now, we did see a nice update today on the economic report, and we do see that our AD line has crossed back over the moving average. That could be a possible beginning of a new uptrend. But again, we need to probably take out this recent high. And again, if we look at the Chaikin one, right? Again, it's turning up, but not even near the high that we saw back in early December. So again, if you were looking for a buying opportunity, you'd probably wait for more of a confirmational of the ADs as they get above, or in this case, because they are showing us more liquidation or distribution, we were probably looking for potential selling or shorting opportunities as of now. Again, that's kind of my interpretation. Don't hold me to it if the market rallies 500 points in the next 2 days, but I'm just showing you how you can use these tools. All right. Okay, so let me go back to my slides. And again, here, these are just references. I put them in the slides, and these slides will be available with the video link at the sometime this afternoon. And you can read the definitions. Again, these are kind of just synopsis or Reader's Digest versions of what the classical definition is. All right. All right. So let's put this together. Let's put all this information that we just talked about together. So what I'm trying to do is create this complementary conditions. In other words, we're going to combine technical indicators that complement each other that'll help us benefit us in our trading. And again, help us develop signals when all indicators are in concert with the prevailing trend, and help us delay signals when they are in conflict. So, for instance, the Chopkin money flow is really kind of a non-trending volume indicator that helps us identify that buying and selling pressure. The RSI is a momentum indicator that helps us potentially find overbought and oversold conditions. And think about moving averages, right? Trend following. We can use them to identify underlying trends. And then one of the ones that I like is price relative to a primary index. For instance, let's say the S&P. And then what we want to do is we want to look for those conditional determinants. So in other words, if buying pressure prevails, then those other technical indicators that I'm looking at, I want to look for those positive divergences or bullish moving average crossovers, or that bullish center line crossover, which is something I showed you with the RSI, or bullish oversold crossovers where, for instance, like a stochastic where we go into an oversold condition and then it turns and retraces out. Those in concert with a buying pressure could be more significant buying signals. Okay. So those are kind of the rules. Let's go to real markets. Now, again, I'm gonna just try to give you an example, and I haven't had a chance to look at this page this morning as I was setting up. But under stocks here, we have most active, and we see volume advances. So if I go in here, what this is going to do is going to show me a lot of stocks that have a large percentage increase from their 20-day average. Now, a lot of these are sub $5 stocks, or what we call penny stocks, or they are small cap stocks. So you have to be careful. You have to look at this with a fine-tuned code. Um, for instance, like, if you're looking at a dollar stock and it has 10 million shares, well, that's only really $10 million worth of trading. But if you see 10 billion or 20 million or 50 million on a $20 stock or a $100 stock, then that's a little bit more significant. Now, before I came on, I did kind of scan this list, and I didn't see any household names, although I do, now that volume has been going here, I do see Citi. So let's give Citi a shot. But I do want to show you one that, maybe I'll show you one that happened yesterday to give you a little bit of an idea. So what I kind of want to do is two things. I want to look at that change in terms of percentage, and I want to find ones that have a large percentage and a large increase in volume. So you can see this is like 2 times our average volume. Or I want to find a very small percentage change on a large amount of volume, those doji-like candles. All right, so let's go to Citi and just see what happens here. Again, I'm putting myself on the limb here. Okay, so here's Citi, and okay, let me do this. Let's start from a fresh screen. So here we are, we're looking at volume. Now, the first thing I probably would do is I'll go here, right click on here and look for potential events, dividends, earnings, and splits. And I don't see any event, but I know that a lot of financials are coming up. So maybe tomorrow's potential earnings. So that would certainly be a catalyst. But here we see kind of this rising volume, right? That's kind of initiating, that's telling us is, there might be the potential of a new trend. Now, if we look at this through the lens of a moving average, now this template gives me the 20, 50, and 100-day moving average, right? We are deviating or moving away from those upsloping moving averages. So that's certainly a positive signal. Hey, so let's go to our OBV, PVT, and boom, yeah, look at that. So again, rising, right, confirming our uptrend. Let's look at money flow, right? Not overbought yet, not overbought. Now, the conditional determinant here on the Chaikin money flow up until this point had been, more of a bias towards the downside. But we are, over the last couple of days, we have gotten above that zero line, that bullish zero line crossover could be that signal. Now, again, you can see that it has happened before where it happened for a couple of days. Again, I probably would like to see a duration, multiple days, before I take that as a potential signal. But certainly is confirmational at this point. And if we look at, for instance, accumulation and distribution, well, a nice spike here, right? A new all-time high looks like on this one. And again, our Chaikin one, again, is kind of showing us that we're trending higher, but probably need to get above here to give that more confirmational trend identification. Oh, well, so I'm a big shoo that this actually worked. Now, the one I wanted to kind of show you was KB, which was a little bit different. This was a earnings event, and again, notice that our chalk and distribution and accumulation is still trending lower. So this would have been one of those price spike volume 1-day events where we see a quick reversal of price action. And again, notice the difference between Citi and KB Homes is our moving averages are trending downward. So we're probably having more of a bearish or selling biased. Okay, so here we got 10 minutes left. I see a lot of questions here. Let me see if I can take a moment to try to answer some of your questions. So give me a moment here, Gene.
Yeah, while John is reviewing the questions that he's going to answer here, I just want to remind everybody that bar chart has three members or three levels of membership available to you so that you can create your charts with all these custom indicators and come back to them and review them every single day. We have a free membership, which allows you to create one chart template. We have a plus membership, which allows you to create 10 different chart templates, and a premier membership with unlimited chart templates. So if you're really into looking at this volume topic and exploring everything that you can do with the charts, I advise you to take a free 30-day trial and get started with charting on bar chart.
Okay, so we have a question from Richie is like, how do I measure weak supply? In other words, weak supply is a falling market that has low or below volume. So here you can see a falling market, right? We see above volume, above normal volume as the market falls. But as we get down to the bottom here, what is happening to our volume, right? Even though the price is still falling, the volume here is below average. That's telling us that sellers' selling pressure is waning, or that sellers are probably at the point of saying they're giving up on pushing this market lower. Okay, so that would be a great example of weak supply. Ralph asked questions about our total volume. Ralph, again, the BATS is 1/10 of the volume. Depends on what companies or what stocks are trading in the BATS, or how orders are executed. But when you look at end of the day volume, it's all the exchanges, right? So it's going to be that official volume. So again, it's just it depends on the different exchanges or platforms that orders are executed on. Brian asked, can you repeat the name of the book? Yeah, it's a technical analysis by Kirkpatrick and Fitzgerald, I think. I gotta look it up. Hang on a second. No, Kirkpatrick and Dahlquist. Yeah, it's kind of your basic standard Bible of technical analysis. All right. John asked what to do with intraday charts when extreme volumes is always at opening and close. Well, John, that's actually the process, or this is the characteristics of markets, is that openings and closes is where we see higher volume. So think about that, those rules that we kind of looked at on the daily, right? If you see a spike in volume, could that be an opportunity for a quick reversal? Or if it's a spike in volume as we're breaking out of a range, or we're a spike in volume that's with our trend, then that is probably that catalyst or that fuel that's going to send that trend in that same direction. Just one of the adages that I like to use is that novices open the market, so there's a lot more mistakes made in the openings, and professionals close the market. And John, I don't know if you knew this, about 80% of all the price movement of the S&P occurs in the overnight session. Do these indicators apply equally over different time frames? Yeah, I think you can look at them. Just you have to remember, lower time frames are going to get more false signals, and higher time frames, let's say weeklies, it might take a longer period of time for the result or the probability to play out. Okay. Have I used Ranko charts? I can't remember if we've done a Ranko webinar. I think we have, but I do look at them. I think we have a webinar. We talk about different type of charts that you can use, and I'm pretty sure we did a Ranko section. Some nice comments. Thanks, Dorothy. Okay. All right. I see a lot of nice comments. Thanks a lot. I appreciate. Name of the book is Technical Analysis by um, Kirkpatrick and Dahlquist. Okay. All right. Yes, Cameron, you can use volume. The problem with Forex, though, is um, you have a chain of dealers, and I don't know, and I haven't done this analysis, if you can rely, depending on your platform that you're getting, and I don't know if this for our website is, are we looking at all the different Forex dealers, or are we just looking at a combination of a few or some? So volume is a little different in Forex, but certainly you can look at those um, tendencies that I went through. Okay. Right, so let's do this, Gene, so we can finish up here. All right, some takeaways. Price is simply the result of volume, that transaction between buyers and sellers. And volume tells us the truth behind price. Volume, rising volume confirms that more participants are getting involved, which validates the price that we're seeing. Right? Volume is the fuel of the market. Falling volume tells us that participants are not concerned with price, right? Which casts a doubt on price. Complacency is a killer to trends. And spikes in volumes are warning signs that price is about to move dramatically. Now, Charles Dow says spikes in volumes precede movement, but we can look at one bar volume day events, which can tell us that we might see a price shock reversal. Excuse me. So I kind of talked about some rules and that. And that one of the adages we had on the floor was they don't ring bells at tops and bottoms, but they do bring volume. And the final one is that volume-based indicators can be used in a complementary or a conditional determinant to help us generate signals. Again, I might be looking at a number of technical analysis that I feel familiar with, and then what I'll do is I'll look at one of these volume indicators to give me that confirmational information that it says, hey, this is exactly what I'm seeing, and giving me that conditional determinant that says, yes, you have the go to buy. So green means go. But if that price pressure or that buying pressure is not present, then I'm going to stop and wait for that green light. Okay. Jim, yes, it is. Volume moving average is found in the in your under the indicators. Look under the standalone, not in the overlays on the right-hand side, Jim. Check that out. If you're having trouble, send that to support@barchart.com. Okay, and so let's see. Next week, what we're going to do is, I think we're doing swing trading. I'm going to show you how to set up our screeners that we have. We have a lot of screeners, but on how to create your own screener to help you learn how to do some swing trading. And I'll give you some kind of tips and ideas how to build your own screener for your own strategy, swing trading strategy. So I hope you folks come and check that out. Gene, do I get everything? Anything else did I miss?
I believe you've covered everything, John.
Okay, great. Thanks, Gene. All right, so folks, until next time, best of health, manage your risk, and the good of all trading.